Well, hello, everybody, and welcome to kind of a bit of a special Southern California market update. Today, we're going to talk about the question that really has been on just about everyone's mind, and I'm going to try to give you the answer that I think probably is the best way to answer this. If you've been watching for any period of time, you know that I'm not the kind of person to do sort of like shock and awe to get views. I'd rather give people information that they can use and actually make decisions from. I think that's the point of what we're trying to do here. So it's going to be an interesting one. So what we're going to do is we're going to go through some of our market indicators, right? We're going to talk about it in that lens of are we at a market that is changing and turning a corner of sorts. And then at the end, I'm going to kind of give you my thoughts about where we are and what I think is going to happen. So let's go ahead and get started. Thanks so much for tuning in, everyone. My name is Stephen Meade with Domicile Real Estate. This is our Southern California housing market update for June 3rd, 2025. Can't believe we're already in June, but here we are. Let's go ahead and jump into those stats. Is the market turning a corner or not? We are going to work to answer that question today. And as always, questions and comments, if you think of them on the midway through, please write them down in the comments here on YouTube, and we will get back to you. So let's go ahead and pull up our market stats here. So the first thing I want to talk about is kind of interesting. This is our total active listings. And I think what's interesting here is what we don't see. So, we've got a pretty gentle path. You see that 1 to 2 million. That inventory is actually flattening out, or under 1 million inventory is going up. And I can tell you that is primarily driven by the condo market. And I think we might even have to take a separate sidebar and talk about the condo market, because the condo market has a lot of things going on in it right now that are kind of unique just to that condo market. So we are seeing inventory continue to rise, but I feel like it's not rising as fast as it was at this point last year. Remember, last year inventory peaked in kind of that late September timeframe. We're actually seeing that inventory showing signs that maybe it is peaking a little bit earlier. It's a little too early to tell on that, but I think there's some signs that we're seeing kind of some interesting dynamics with inventory this year that are different than we've had in years past. Now, if we look at our last 14 days of new listings, this is another interesting right? Is while both of these numbers are higher than they were at last year, right? If you look at the right side of this graph, both under a million and $1.2 million, it's no doubt that these are higher. You'll also notice that both of these are on a month of downswings for new listings hitting the market. I feel like this is a year where we saw a lot of inventory growth earlier in the spring than we would normally see it. Normally it's a fairly smooth progression. I feel like a bunch of people put their homes on the market earlier than they otherwise would have, and now we're starting to see that subside a little bit earlier than we would have. If we look at our new escrows, those are, if we're looking at our $1 to $2 million category, those are in fact a little bit higher than we were at last year, kind of facing a little bit of a slow and steady increase, right? That's positive news. If you're a seller, you want to see that. But if we look over here under $1 million, we see that is actually down versus where we were at last year. And I think overall, you're going to find the total number of transactions, right, is down versus where it was at this point last year. And I think that's really an important distinction to make. I heard a comment recently by the California Association of Realtors chief economist, Jordan Levine, who is probably, I think, the best housing economist in the state of California. He made a comment that we don't really have a lot of supply side dynamics in our market. It is all demand driven. And the reason for that is because we simply do not have enough housing units, period. Now, we might have periods where more come for sale and fewer and fewer are up for sale. But the reality is we just don't have enough units. So really the demand is really the big story. And this demand does look weaker than we would expect. This has not been a blockbuster spring in terms of home buyer demand. I think we have a lot of economic uncertainty, some political uncertainty thrown in there. I think some job instability. I think we've got a lot of people who are uncertain about a lot of things, and they're holding off. Also, the Southern California housing market, especially at the higher end, is really driven by stock market values. When people's portfolios are high, they feel wealthy, they feel like they can buy anything, and they do. When those stock market portfolios are having a little bit of trouble or some volatility, people tend to pull back on those bigger purchases, especially of the more luxury oriented homes. If we look at our absorption rate, though, I found this one particularly interesting, is we're seeing a little bit of a rebound in both under 1 million and 1 to 2 million. I thought that was kind of an interesting thought, right? That's a little bit of a mixed signal. We're seeing a rebound in that absorption rate, indicating that buyers are in fact starting to go back up and gobble up some of these listings. We're still well below where we were at last year, at least for our under 1 million category, though our 1 to 2 million is actually approaching. It's not super far off where we were at last year, and it's rising, whereas last year the absorption rate was a falling trend. So kind of, again, another bit of a mixed signal in this market. We look at closed prices, we see on our median, we're pretty close to where we were. Our 75th percentile is actually up a little bit over last year, and we're basically flat on that 25th percentile. I think this is a market that really has, if you look at, despite the ups and the downs over the last year, for the most part, it's been a pretty stagnant market. It hasn't had really a lot of huge jumps from where we were at this point last year to where we're at this year. And I think I would caution anybody who might think that we're going to either see big increases or big declines in prices. I think that our market dynamics are such we're not going to see, at least not over a long period of time. We might see some momentary jumps or hiccups. I don't think we're going to see a huge long downward trend. Now, if we look at our percent still active after 14 days on market, that number for our 1 to 2 million has hit a high point. And so you might think, how can that be? How can we see our absorption rate, right, going up, but see our percent still active after 14 days on the market, also that number going up? Those normally move opposite each other. Well, one of the things I will tell you is right now, I think we have a situation where we've got buyers who are incredibly picky about what they are buying, right? And I think we're seeing the reason why that absorption rate is changing is I think we're seeing some sellers are adjusting their expectations on the price. They're not pushing the market, they're lowering those prices. So we're seeing some of those older homes in inventory are finally starting to go when the sellers get realistic about where that property needs to be in terms of the market. The fact that the new inventory is not just getting all the buyers all at once, that should tell you something, right, about where sellers are at versus where buyers are at in terms of pricing. I think there's a fundamental disconnect happening right now between where buyers think the market is and where sellers think the market is. And we're seeing a lot of that in consumer confidence, right? Like consumer confidence has been plummeting, but our general other economic indicators have not been plummeting, which I think is kind of fascinating to show the difference between sort of the reality as well as the psychology. Now, if we look at our close to list ratio, remember this is looking in the rear view mirror here. It's hovering right around that 100% number, not a lot of deviation. So there's not really a lot I think we can glean from this graph right now, because if we were at sort of a turning a corner point, we wouldn't see that show up here for another 30 days. Now, this one is another one that I think is an interesting mixed signal, right? This is days on market for new contracts. So this is the homes that are actually getting offers in them. And we see it's going up a little bit for that under 1 million category, right? We've got first-time buyers who might be nervous about employment, nervous about some other things. We see that number dropping for those $1 to $2 million homes. And what does this tell me, right? This tells me that, again, this is another sign that buyers are extremely picky, right? So the homes that people actually want, the ones that are desirable and compelling, whether it's because of their amenities or because of their price, those homes are seeing offers still happen quickly. There are still buyers in the market, right, for homes. But the question is, is that demand becoming even more and more concentrated on the compelling homes and less concentrated on the market overall? I think that is what's happening. Now, if we look at our affordability chart, this one actually took me a little bit by surprise because of some of that weakness in prices. One of the things that we're seeing here is that we've actually closed that gap a little bit on that payment index. And we're actually starting to see that those numbers are not super, super far apart from one another. They're actually closing a little bit. Again, I think this is a sign of a market that is not in a terrible amount of danger, but I would keep an eye on that psychological factor. We look at our prevailing mortgage rates. They, again, are just hovering in that just under 7% range. I think, everyone who is proclaiming wait for interest rates to drop, given the Fed's mood, given some of the inflation numbers, I just don't see there being wholesale drops happening anytime in the immediate future. I think that might be something we see towards the end of the year. But I think if you're sort of waiting for a mortgage rate savior to come into the marketplace, I just don't think that's going to happen. So, all right, now I want to talk a little bit about what I think is going to happen. So, we have a lot of mixed signals in the marketplace, and I think we are at a point of inflection. And to me, it's a bit of a fork in the road, right? And I think there's really two ways that the market can go. And, one of those directions, right, is that we see that consumer confidence psychology take over. Buyers start to get the feeling that they think prices are dropping. They want to hold off on the market. And that could absolutely have a deleterious effect on the real estate market. The other option, right, is that we see that this is a bit of a hiccup in the road. We get some economic stability, and people are back on the buying a home train, right? Like even if there's a momentary drop in interest rates, any of those things could kind of spur that demand. And you'll notice I keep talking about the demand side of this equation, right? And another big reason for that is we've got a lot of sellers who I think are in positions where they don't necessarily need to sell. I see a lot of homes hitting the market on more of a trial basis, right? Like, well, if I can get somebody to give me this price. And we've talked about that in the past, is how motivated is that inventory that's in the market. So yes, inventories have climbed. Yes, it looks like sales are slowing. And that brings me to another point that I want to talk about is, when we talk about how is the real estate market, right? Most people who are buyers and sellers are talking about prices. Are prices going up? Are prices going down? Are prices holding steady? But there's another dimension to the real estate market, and that is the number of sales, the speed of sales. And what I see happening in the market right now is I'm seeing a lot of listings are ending where they just cancel or expire, right? The sellers don't get the demand that they think their home should be getting. They don't see that activity, that level of interest that they want. And so they just pull the home from the market. So even though that home might have had 60, 90 days on market, that doesn't really go into our sales stats because it never actually sells. So, I don't really think there's a lot to indicate that we're going to see a period of falling prices, but I will tell you this, there will be sellers who do need to sell. And I think if you're a buyer who can root out some of those opportunities, I think you are going to see some good opportunities, maybe not always necessarily in prices, but possibly in concessions, in making demands, like, for example, that you get to move in a certain time period. I think you're going to see some more flexibility on those sellers who actually need to sell. Now, by the way, if you're a seller in this market, like, what is my advice to you? Well, my advice to you is, you have to have a compelling product. Now is not the time. There's a couple of things that I wouldn't be doing right now. I would not be testing the market with a new high point for your neighborhood. I don't think now is the right time to do that. I would be preparing your property to be the most compelling property in its price range. You need to stand out and be in that top 10%, or you're just not going to give the interest. And you can do that by either preparing your property to make it the most attractive in your price range, or you can do it by aggressively pricing. I think most sellers would rather do that preparation and get the price they think that their property is actually worth, rather than discount just to get it moving, to compete after that level of buyers that might be a little bit smaller of a buyer pool than they hope. Anyhow, thank you so much for watching. Questions and comments, again, we love them. Don't hesitate to like, subscribe, hit that notification bell. And of course, if you are considering buying or selling real estate in Southern California and you'd like our expertise, please do let us know. We would love to help you out with that. Thanks so much for watching, and we'll see you again real soon.